funds. How many of us have them? Funds. The ones you can depend on. Get those funds.
Hello. Welcome to Balance Your Books podcast. Hi, April. Hi, Kimberly.
Hi, Keena. Hi, April.
Hello.
Hello. So today we are back. And guess who's back with us on this podcast? Welcome back, April.
April is back
Glad
from
to be back.
assignment.
She was on assignment, right?
Yeah.
She was on assignment for the last podcast. So, April, welcome back. And we wanted to do a topic that we're hoping April can add a lot of insight to us. But before we do that, what do we always ask, Kimberly, of those who listen?
Please, if you love the podcast, like, subscribe, and share with your friends, family, and coworkers. You can find us at yourbalancepartners.com. And that's about it.
That's about it.
Share, go to the website, share. We're on Apple, Spotify, and YouTube.
Yes. So, and feel free to leave comments and things like that or questions as well. And we will try to address those in future podcasts. So, one of the things that has come up a lot, I know I've been spending time going to different like sessions, seminars, things of that nature. And also in speaking to some of our clients is really understanding why you organize as an LLC or an S Corp, and really what is specifically what is the difference and what is the tax benefit. Because everybody says it at these lofty levels of, yeah, you need to have an LLC, you need to have an LLC, or you need, you need to be an S Corp, or even some people who we've worked with said, no, I need to be a C Corp.
C Corp.
For a business that earns $2. And so, there's a lot of different questions, but we like I always say to our team, I'm like, well, let's just Sesame Street it. Let's make it as simple as possible for people to understand some of those differences and what they really mean. So it was in a conversation the three of us were having, and even I was asking April, like, well, what really, when you talk about self-employment tax, what is that? What does that really mean in layman terms to the regular folks on the street who are running businesses? Yes. So let's maybe talk about first, or I went to the right. So April, tell us a little bit about maybe first the difference between sole proprietor and LLC. Maybe we start there. Like, we kind of progress a little bit.
Okay. Well, yeah, we did talk about this in a previous podcast. But a sole proprietor is basically anyone who starts a business that doesn't formally organize it.
Right. But meaning we talked about what the definitions were of each one, but from a tax benefit. So, or which part of the tax return is used. So making,
So if you're a sole proprietor, it's going to go on your Schedule C.
Right. And so Schedule C reflects all of the business expenses and income that you created.
Yes.
Okay. So if the person had a job, a job with a company where they received a W-2, as even I said to a client the other day, you may have to go get you a W-2. And he was like, what are you talking about? And I was like, okay, let me say this. You go get a job where they have payroll and you receive a check on like the 15th or the 30th or whatever their payroll cycle is. And they send you a W-2 form in January that you would then use on your tax return as your income.
Yes.
So I was like, he's like, oh, okay. Like you go work for somebody else.
Right.
And you're on their payroll as an employee. So even a situation where someone may have a sole proprietorship and they're an employee of somebody else, they would have a W-2 that is
Yeah.
on their main 1040 page, and then they would have a Schedule C that would have, like, if they had a, I don't know, lawn business, and they had income for that, and they had expenses for that, that should be on their Schedule C.
Yep. Schedule C can
Right.
account for all of your side hustles.
Okay.
And that's all within like the 1040 package, right? Like there's no separate, if you're doing your taxes yourself, and I'm not going to shout out any of the tax software, but if you're doing it yourself, that's all within one package, the 1040 package, that the Schedule C is included. There's not a separate form you have to go get to fill out, correct?
Well, the Schedule C is a separate form, because if you don't have a side hustle, then it wouldn't be included as part of your package, as you're calling it. You know, so your 1040 stands alone. It is, you know, its own document. And then there are attachments to it depending on what other type of income you're earning.
Okay. And the reason why I ask is, you know, I think ever since probably the early 2000s, I've always had a Schedule C because there's always been something else. But whenever tax software I use, it's, I guess because I click that box, it's in there.
Yeah,
But
yeah. It may seem like it's part of the 1040 package, but you know, if you didn't have any side hustles going on, you wouldn't have a Schedule C. If you didn't have any rental properties, you wouldn't have a Schedule E. You know, so it's different income revenue streams that impact what additional schedules may be included, or even expenses.
Got it.
And you mentioned rental. So if their business is rental properties, it's not Schedule C, it's Schedule E.
It depends.
On what?
It depends. Because a Schedule E generally captures like your individual rental properties that may not be part of a company. But if you're running your rental company business, you've made your rental properties LLCs, you know, so they are business entities themselves, then, you know, they wouldn't necessarily be included in the Schedule E, which captures like, you know, you as an individual having rental properties, just, you know.
Yeah. So you, yeah. So, yeah. Okay. To make sure I understand. So if I am an individual and I own another property and I'm just renting it out, then that would be on a Schedule E. I didn't make a company for it or anything. I just rent it out. I posted it up. Someone's renting it. I got them a lease, and then they're paying me money.
Yes.
Whereas if I then said I want to have Kina Rentals as a company, then and maybe I have one property, maybe I have two properties, and I do Kina Rental as a company, then that would be something that I would track on the Schedule C. Potentially.
Because it's a
yeah. Okay.
You know, there's a lot of nuances to this, so you can't just say, "Oh, yes, that's how you do it," because it just depends. I mean,
but that would be one of the questions that's asked.
Huh?
That would be the question that's asked: is how do I have it organized with the state, and if I set it up as a company and versus me just individually renting out? That would be the question that my tax preparer should ask.
Yes.
Okay.
Yeah.
And so that's the conversation then that someone should be having with their tax preparer, because part of, I think one of the things is that people are not giving all of the information to the tax preparer. And so you want to make sure you're telling them everything on how you are operating your business so that they can prepare your return the appropriate way.
Yeah, that's what I would say is key. More so the individual sharing all of their information. I feel like sometimes people might be hesitant because maybe they feel like if they share too much, maybe they're gonna find themselves in a in a tax liability or something that maybe they weren't expecting. I don't know.
Mm-hmm.
But the more upfront you are, the more transparent you are about your businesses, your side hustles, your regular employment is pretty cut and dry with the W-2 that you mentioned earlier. But the more you share, the more the tax preparer has the information to even just ask additional questions that maybe you didn't think of. So it's very helpful to be transparent and to know what's going on. Like, when you have your tax return done, look at it. You're supposed to review it anyway.
Because it's your return.
It's your return.
It's your return.
Your return. Someone's just preparing it on your behalf. You are ultimately responsible for that return. So get familiar with it. If you're not sure what something is, ask the tax preparer to explain it to you. So.
Okay. Yeah. Because I think, so that's like the first step. So for a sole proprietor, so I think one of the key things is you got to keep separate records, right? So of what your expenses were related to that business and what your income was related to that business in order for your tax preparer to put it on the Schedule C. So always the minimum for any time you start a business is to just have a separate account, bank account that has all those things coming in and out to make it easy for you. And only those things coming in and out.
Okay. I wouldn't.
You don't think you should have a separate bank account?
I think you should, but I wouldn't say that's the minimum. I say the minimum is if you don't, make sure you're tracking. Make sure you have a way.
But most people are not on do Excel spreadsheets.
Right. But just make sure you know what's business expenses and income and what's not. I think some people have issues opening. One client I know has had an issue with opening additional accounts. And so I was like, well, we got to track this. So at a minimum.
As in they didn't like opening additional accounts?
No. They were having, it was something with the bank. I didn't ask all the questions. But I was just like, well, we got to make sure we track this.
Yeah.
On your personal card, we need to track this. So at a minimum, track it, but it's best to have separate accounts for your business and personal.
Yes. Yes. Because know thyself. You're not gonna keep up with it otherwise.
Yeah. And personal expenses are not deductible.
Right. And that's been the struggle with this client is getting, hey, tell me if you spent this money, let me know so we can, and it's been a struggle getting that information. So, yes.
Yeah. And April, so you said personal expenses are not deductible. Let's talk about what are personal expenses versus business expenses. Because so before we go to LLC, so there are certain things that you can include in your business, right? If you use it for business purposes, like you have a cell phone, you could potentially use some of that. If you have mileage that's related to your, depending on what your business is, you have mileage that you do for your business. You maybe had to, I don't know if you have to buy outfits, uniforms, whatever, something that you did for your business. So you really want to, and that's why if you purchase those things as much, or like you were buying gas to go out to wherever, if you really have it a separate account, you had a separate card for it makes it easier to be like, I'm on business right now and I can swipe it, or I can put this, this phone is my business phone and I'm gonna have it, be in those expenses or what have you. And then it comes out of that account. It just makes it cleaner for you. But those are the kind of things that are business expenses.
Yes, I would agree.
And then there's also, go ahead. No, go ahead, April. Because I was about to ask you if you want to answer it.
No, go ahead.
Because I was going to say, What you say? I'm super. So what about like, because also there's, you could be using a portion of your home as your office
Yes.
and things like that, right? So those are also things that are potentially deductible. So, so it's good to, really think about what things are you actually using for your business. So you're leveraging and getting all of the potential expenses that you have related to your business, right?
Yeah, I would agree completely. I mean, there are, clearly if something is personal, it is because it has no business use. You've not done anything business related as it relates to that particular expense. But there are a couple of things that, are gray areas probably for people, like the use of their vehicle, the use of their home, the use of their cell phone. And so when you talk about like home, for instance, you want to look at what is, you want to have like a dedicated space that you use for business. And then generally yep. Kimberly's letting us know she's in her space.
Yes.
And so, when you look at your square footage and you look at that space, you just calculate, what that square footage is that relates to that. And let's say it's 20% of your total square footage. Well, if it's 20%, then that means 20% of your electric bill, 20% of your water bill, 20% of your gas bill, 20% of what am I missing? Lawn care, like all your
Internet.
security. Yep. What did you say, Kimberly? Why you did that?
Homeowners association fees.
Yes. Yep. I mean, basically 20% of all of your costs.
Yeah.
Let me make note. Look,
and the reason why that's the case is because all of those expenses is what it takes to have that house,
operate
and
that
maintain
office.
it. And so those things are, calculated based off of square footage. Now, when you're in your office space, so Kimberly's in her office space, she has a cute little clock. She's got some artwork in the corner. She's got a plant, next to the artwork.
That's struggling.
He has a picture in the background, So those are 100% deductible because you are furnishing office space, even though it's located in your home. So when you buy particular things specific for your business, yes, your desk, your computers, whatever it is, then those are 100%. So that is good to know because I don't think everyone kind of takes into consideration when they are working from home, and people are working from home now more than ever. So making sure that you capture all of your expenses is really important.
Yeah. And keeping record of that. And once you kind of know that, say, that 20% is your office, then every year you know what the baseline is of what your percentage is. Like you don't have to recalculate your percentage because now you've established it. We have record of it, and then you can use whatever. Just put in the new expenses for the new year, and then toward the calculation.
Yep. And then, if you change offices, if you add on space or what have you, then that's when you'll need to recalculate.
Yeah, because one of our clients, once their business was doing what they really built out, because they also do, they make things, so they really built out their office space. But it's clear in their home. I mean, they tricked it out, but it was all within that office space to get more things that related to their business. So they had that expense for that year.
Okay.
Yeah, it would look really good too. Okay, so I think that's one of the big things, and let's talk about self-employment tax and what that is, and and how you have to pay a minimum of that when you, because I think that's the other thing that's confusing. So from LLC to S Corp. Do we want to talk about this podcast, or do we want to do a different one?
I think we should do a follow-up, because as we're getting closer to the tax filing season, I think we should be as detailed as we can for our audience, and
Yep.
make sure that, they understand this here,
Yes.
and then maybe dig deeper in a different podcast when we start talking about S Corp and things like that. Because
Yeah.
I mean, as we've talked, I don't know why I haven't been including my HOA fees
Mhm.
in my, and that's
The whole home cost,
Right.
home.
Right. But I haven't been including it
Yeah.
because, it doesn't show up. It's not in my mortgage. It's not here. It's not there. But I'm about to open up my spreadsheet that I use and add HOA fees. And they're going up next year. Yes, ma'am. Yes, sir. I'm going to get that tax deduction. But yeah, I think we should wait until another podcast, because one of the things I want to go a little deeper with this home office space. How can I say this? It's not that deep. I had a client ask me, well, yeah, I do have an office, but sometimes I'll put my ironing board in there to iron my clothes. It's not that deep.
It's not that deep.
It's not that deep. Even if you use it for
Yeah.
something, it's not that it has to be 100% exclusively for your office.
Yeah.
I mean, for your business. It's your office space, but like if your kids come in and play sometimes, don't think you got to deduct 5% of the 20%.
Yeah. Right.
We're
Right.
not getting out. You got your 20%, you got your square footage. This is your office. This is what you use.
Yeah.
And if by chance company comes to visit and you pop up air mattress, it's still your office.
It's still
That's
your
what,
office.
because I've had questions like that, and I'm like, it's not that deep.
Yeah. It
Yeah.
is. Yeah.
The only time
Okay.
it becomes deep is if it becomes material and
Right.
significant.
Right.
So if you're materially altering, instead of the 20%, you say, oh, I use 50% of my house.
Mm. Yeah.
Do you live there?
And it's not true. I mean, because some people
Mhm.
might use 50% of their home, but
Mhm.
we're talking about things that aren't accurate. So when you
Right.
start dealing with inaccuracies and fudging the numbers, things like that, then that's when you run into problems. But
Mhm.
Kimberly's right. If you have to pop an air mattress in there for family for a day or two, you don't have to reduce it from 20 to 18%. Because it's based off of the square footage and
Yes.
how often you're using that space.
Or your parents come to visit, you give them your room and you sleep in your office for 2 weeks. Hypothetically.
Hypothetically.
All right. I think this is a great topic to go over. You know what we forgot to do, ladies, is to think of our shooting the topic.
Oh.
We didn't think of that.
Mm.
Well, what's something we've done recently that's interesting?
Can I just we talked about sports, right? We've talked about
Yes.
sports before, but one of the things that I don't know what it is about Atlanta sports teams that we can't hold a lead.
Since the taping of this podcast, we're pleased to state that the Georgia Bulldogs did in fact win handily. And unfortunately, the Atlanta Falcons did not.
We can't.
It's very timely.
I mean, because the Hawks just yesterday. Oh my God, Atlanta
Didn't
Hawks
they lose by 1?
lost by
Yes,
1
but they
point.
were winning by 30. It wasn't as high as maybe.
I was at a
30.
Christmas party, so I was peeking, but I think it had gotten up to 20.
Yeah, it was at least 20.
We were up by 20 and lose by 1.
Yeah.
It's like, what is it about? You got Atlanta. Atlanta is the capital of the South. You can challenge me, but Atlanta is the capital of the South. You've got crunk music. You've got all this that came out of Atlanta, but our sports team can't leave their foot on the necks of their opponents after they get the lead. we pull back like, maybe it's the marijuana smell in the air.
It might be.
And everybody
Wait a
gets a little
minute.
lax.
You smell marijuana at the game?
Oh, not there. I'm just talking about Atlanta.
Just in Atlanta in general.
Atlanta, if you have your car's air conditioning system open to where the air comes in,
Yes.
there are certain places when I drive, once I cross over this exit,
there's a certain part of the
contact light.
connector
Right.
that you come through, and it's welcome to the A.
Right. It's a certain part on 285 around the perimeter that when you hit this part, it's like, okay, you're in Atlanta. I'm like, I don't understand what it is that, being a Falcons fan, decades of we're up, go in at halftime, and then we lose the game.
Mm-hmm.
And the Hawks, we were up at the half. And I'm watching, I'm at a Christmas party. I was like, oh, it's good, it's good, it's good, it's good. And then I see the text messages coming in. And so I sit down, I turn the game on. I was like, we lost.
Yeah.
I don't know. I don't know what that is. I don't know if I'm gonna put it on Atlanta sports. I don't know what it is. I don't know if it's because maybe they think like I do, the way I comfort myself when the teams are going bad. But I live in a beautiful city and I have a wonderful life.
I was about to say, maybe that's why. Maybe that's the sacrifice we have to make for living here.
Yeah. Living in
Or maybe
that's the penance. That's the penance.
Draft those people with that edge, because I think you're right. We don't have that closer mentality, that win by all means necessary. And the one person that kind of exhibits that the most on the Hawks is Trey, and he's out, right?
Well,
yeah, he's still out.
Yeah. There were some games where I was like, if we had Trey, we would have won.
Yeah.
If we had Trey, so yeah.
I wonder if it has anything to do with leadership, though. Do you think
that's
that
what I was about to say.
Strip these competitive players in some form or fashion through their leadership? Like, can you think of a player where, you felt like he had that edge, he had what it took, and then he comes to Atlanta and it's like, wah, wah. I mean, what
I don't
happening?
I think that, and this is what I've heard, but one of my favorite former Falcons, John Abraham, I heard that he was let go because he disagreed with the coach at the time and had no problems telling him that. And he was one that had that dog in him. Even more recently with the Falcons, Ray McLeod, he was flashy, hair all out, golds or whatever, and was not a bad player, but he was let go, they say, because he was upset. He disagreed with the head coach firing the receivers coach, which I think was a scapegoat. And because of that tension, they let him go. And I understand a level of respect.
Yeah.
But if you can't be challenged on your piss poor decisions
when you're losing,
from other people's perspective,
right.
And the person who makes the decision doesn't think it's piss poor.
Well, yeah, of course, I'm not gonna fire myself, so I'm not gonna fire the incompetent me, so I'll fire, But and so I think that kind of lets the entire league know that you can't come to Atlanta and put your fist down, So I think that's it. I mean, we don't want the players running the organization, right? But I think we need, from the top down, love Arthur Blank, but he's too nice. I think he's the reverse of Jerry Jones, who is cut.
I hope he is. Jeez.
He's the antithesis, meaning both of them are so involved in the organizations, right?
Yeah. But
he's too nice, and we need some killer instinct, and not just the Falcons, but the Braves. leading the division. What year was that? Led the division and then lost 13 to zip or something in the playoffs.
Yeah.
What year was that? The year after we won the World Series.
Yeah.
It's like Falcons, Braves, Hawks. I think the Dream got some dog in them. I think.
Yeah.
But it's just
they had a little.
I don't know,
collapse
because
this year.
I don't really watch the Dream that often, but
when
when I watched that game, who was that again?
Indiana.
And they lost.
Indiana.
I was very upset. And
Yeah.
I was,
I was
like, I'm
upset.
glad I haven't been watching.
Yeah.
Don't be like that, April. Don't be like that. Don't be like that. But yeah, so
Yeah.
I think it's and is it the state of Georgia? Because I need Georgia to beat Alabama today. Because what in the world? You beat everybody else, but you can't
But
beat
you can't
Alabama.
beat Alabama. Yeah.
I'm sorry. We went longer,
Right.
but we're in the heat of sports season. We've got football, basketball, and I'm a frustrated fan.
Yeah. Well, with that, everybody, thanks for joining us.
Yeah.
In Atlanta, we're gonna have a t-shirt. In Atlanta, you can't have everything.
Right.
Can't have it all. Right.
You can't have it all. You can't have
But
a city
why not?
that's
But why not?
well,
why
okay. Let's dig into that in a future podcast.
Yeah.
Why not? Why
Yeah.
not?
Why not?
Why can't we be Wakanda? All right. So thank you all for joining us today. And stay tuned because we're going to do more around these topics to get you prepared as you're going into your tax season. All right, ladies, we'll talk later.
Bye-bye.
Bye.
Remember, our advice is general knowledge. Please consult your tax professional for directions specific to you and your business. Thank you.